Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, here we are again, and you and I, we've both been out in the real world over the last week or so, haven't we?
We have, yeah. It's not the norm for me, as people will know, but yeah, and I seem to have picked up some kind of cold or something from it, so maybe it's a reason not to go out in the future. But no, you I think yours was, we were out and about, but we're at different events. And
yeah, different events. Yours was very much... Yeah, yours was very much indoor, wasn't it? Mine was outdoor.
Yes, but we'll get onto a bit of this in a minute. But yeah, we've got a busy show for everybody today. Some interesting stories that we've picked out from some of the headlines. So please do stick with us today, because I think you'll like some of the content from today. But yeah, I think the first sort of shout out this week is, as Curtis alluded to, that I had the pleasure of being involved with a VRA, the Vehicle Marketing Association event last week that we supported with Geldards, with Jonathan Butler, and we had on recently talking through the DCA from Geldards. So we had them, we had Suzuki, so our friend Del Wyatt helped support in terms of branding and sponsoring the event. But more importantly, we had KCs that joined us from London, and they went through a fascinating, very detailed position with regard to the DCA, the discretionary commission arrangement, and where they see it heading. So, I mean, it was great. It was fascinating. I think we had 70 or 80 people there in the audience, a lot of dealers, a lot of lenders for obvious reasons, because that's who this is impacting. But great update, great, fascinating discussion. We could have stayed there all day discussing the topic, to be fair, with these guys that came.
Yeah, no, it sounds like a great event, Phil, and a good lineup of speakers there. We do actually have an update from that event as one of our stories later on. So whilst you were doing that this week, I was at the SMMT Test Day, which it's an annual media event. It's a press event organised by the Society of Motor Manufacturers and Traders. And basically what they do is they take over the Millbrook Proving Ground in Bedfordshire for the day. They invite all their manufacturer members to come along and bring a selection of cars, and invite journalists and in more recent years influencers as well to
selfie sticks right with it.
Yeah, you could tell the influencers from 100 yards, because they were going around with selfie sticks, videoing themselves wandering around the cars. So the deal is that you turn up and you can basically drive any car there on the Millbrook Proving Ground hill route. And this year, my mission was to drive some of the Chinese brands, which I did pretty much exclusively. So I drove some BYD cars, GM Aura, and a Moda, and Jayco were actually there, or Jayco were there. I don't think they were advertised in advance, but they were there. And one of the surprises of the day was I got into the Jayco 7, switched it on, and it was a petrol engine car, having driven these EVs back to back. So, a bit of sort of traditional ICE tech there. But the Jayco 7, that is a very impressive car. I think we're getting it later in the year, because some of the cars that were being presented at the day weren't actually on sale yet. The Moda E5, that goes on sale in Q4. But I mean, my impression of the Chinese brands was that they've pretty much skipped a generation, and they've hit the ground running, in that you get in and out of these cars, and they're as good as, in terms of exterior design and interior design, as some of the best European cars. So they, as I say, they really have hit the ground running.
Yeah, and I think to your point there, I think when we talk about the stories, when we've got dealers adopting some of these new OEMs entering the sector. These have had in advance what you've just done. They've been over to the market, they've gone and seen, test-driven the cars and understood the strategy of some of these OEMs in terms of their growth plans. And they have that added insight as to what to be expecting and what is coming from these manufacturers. And to your point, the build quality and the tech on these vehicles and how good they are. So I saw some of the pictures that you shared, Curtis, and others. I mean, you can just see there is, let's say, a little bit of influence from other legacy.
Oh yes, yeah, most definitely. And in terms of the quality, it's not like, I mean, certainly I remember back to the 90s when I first got involved in the industry, and we were seeing those sort of first generation cars from the likes of Hyundai and Kia, and back then the interiors were pretty basic, horrible plastics, the exterior designs weren't that great, but they evolved as brands. But the Chinese brands, they're hitting the ground running. They really are.
Yeah, I think we forget of how some of them have got reasonably established in China.
Yeah,
exactly. These are not new brands coming to the market entirely. They have established themselves in the Chinese market. They're just happening now to come into Europe and the UK and other markets. So, yeah, it is. Without filling the full show on it, I think it's going to be fascinating how some of this sort of starts to evolve. And you can see, like you say, why some of the dealer groups in the UK are partnering with some of these new entrants coming into the sector.
Yeah, definitely. And it was also great for networking. I met up with Tristan Young from Auto Retail Agenda, Tim Rose and Amy, both from Automotive Management. So it was a great event just to bump into people and have a chat. So
like the old days, Curtis, like the old days.
It was, yes. So whilst I was up in Bedfordshire enjoying myself, there was a story rumbling on in the press, which really Car Dealer have got the scoop on this. And this is the action that Peter Waddell is taking regarding Big Motoring World. It's the court case in the High Court. And it did start middle of the week. So what Car Dealer have done is they've assigned one of their reporters, Jack Williams, to cover it. So what I urge any listeners to do, because it really is an evolving story, go to Car Dealer, because what they've done is they've itemised what happened on day one, what happened on day two, and as we speak, what happened on day three. And they've really sort of captured what's happening, what's evolving, and also what the likely timelines are for as this unfolds.
Yeah, want to keep a check on. I mean, you see, the risk with us talking about the stories is they are evolving. It's a very quickly moving story because, as you say, Car Dealer have got the scoop. They've got somebody there who's reporting back as it unfolds. So, they say if you keep up to date with it, just head over to Car Dealer, and Car Dealer will be obviously pushing everything out as it unfolds. But next week, as usual, we've got our latest catch up with CAP HPI on the current valuations within the sector. We'll be looking back at the month of May, but more importantly, looking forward to what's happening in the month of June. Unfortunately, Darren can't make it this time, but we have got the pleasure of being joined by Chris Plum, who some of you may know. I mean, his knowledge of the EV sector is huge. That's part of his remit within CAP HPI. So I think one to definitely tune in for next week with Chris. We're getting the whole the lowdown on the current market evaluations, but more importantly, we might dig into that EV market a little bit more with Chris. But one to definitely get in your diary for next week.
Yeah, I'm looking forward to that because that'll be the first time that Chris has been on the pod, and really looking forward to hearing his insights on those used EV trends. So coming back to this week's show, we will have a Men-able moment with Stephen Whitton looking at how automotive businesses can benefit from a 28% reduction in stress levels, a very precise percentage. That's
very precise.
Not 30%, not 25%, but so let's hear what Stephen has to say about that, and that'll be in the second half of today's pod.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from Motor Finance, Autocar, AM, Car Dealer and Auto Retail Agenda. Now, we have plenty of used car related news stories this week, starting with Fitch, the US credit rating agency, is warning of increased risk from over-inflated RVs in the UK car loans sector. Prices of used electric cars approach ICE equivalents, reports Manheim, and a growing number of buyers are looking to purchase used cars in the next 3 months, reports Motors. Elsewhere in the news, we name the world's top-selling BEV makers in 2023, and we'll finish with updates on 2 ongoing stories with the latest on Cazoo and the FCA's discretionary commission arrangement ruling.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
So first story is from Motor Finance, and the headline there is Fitch warns of increased risk from over-inflated RVs in UK auto loans, which this is the only publication and website that I saw covering this particular story. And it is interesting because Fitch, they're one of the top 3 US credit rating agencies, along with Moody's and Standard & Poor's. And typically they look at companies and assess companies and indeed sectors. But it's the first time I've actually seen them look at a specific sector in the UK, and it's one of interest to all of us because it is looking at some trends within the used car sector. So they've highlighted how increased market value risk in UK auto loan arrangements due to overinflated contractual residual values. So putting that in English is that they've really drilled down. They've looked at possibly over the last 3 or 4 years how residuals had been set high because used car prices were high, and those residual values have actually dropped, as we've seen month on month as those used car values come down. So according to the report, these RVs were inflated during high used car prices, leaving them exposed as prices correct rapidly. So that's really what they're looking at the moment.
Yeah, and as you say there, they're saying that they analysed 15 UK asset-backed securities transactions and said that the significant rise in EVs as a percentage of the purchase price since 2020, and that high sales prices during that period led to a substantial increase in the cash balance of contracted residual value. So that's where you've got your GFV, your guaranteed future value, on a PCP or your buyback value. But he's saying in the report here that used car prices in the UK are now adjusting more swiftly than anticipated. A 3-year-old used car currently holds about 51.7% of its list price on average, and they're saying that that's a decline of almost 15% from a year ago. Now, we kind of know that, don't we? Because we're talking with Devon and Cap HPI on a regular basis and other things coming out. But more importantly, what they are trying to highlight in the story is those lenders that may have actually, at the point of putting vehicles out on credit through that spike, would have been setting residual values or guaranteed future values at a higher point. And those vehicles are now coming back into the market or at the end of their contract, which is where they're highlighting the potential risk. Now, hopefully this, you'd hope that some of the the smarter operators would know that the increase in values was a blip, a short-term reflection of the market, and not to be reflecting it too heavily in the future residual value of the market, because that would be obviously dangerous for the consumer.
Yeah, and it does actually go on to look at used electric value prices and how they've decreased more rapidly. Again, this is a conversation we have every month with CAP HBI, but how they've decreased faster than the wider market, and due very much to fleet demand for new EVs outstripping private demand for used EVs, making loans, financing EVs more susceptible to those residual value losses, and contractual RVs often do not fully account for these additional risks.
Yeah, I think we've spoke about it on the podcast before, but I think generally the conversation, like particularly towards EV, is because of the change in landscape. Without using Tesla as the only example, but what Tesla did with the new vehicle pricing, it had a direct impact on residual values. And we spoke recently about Carlos from Stellantis talking about reducing the price of his vehicles by 30 to 40% by 2027. If you're putting vehicles out on risk today with a buyback, whether that's guaranteed future value or just a residual value on your leasing, you've got to factor that into what you're doing. And that has a direct influence on the market. So I think, it's good insight. It's like you say right at the start there, it's interesting that it's these guys that have picked this up as a potential risk within the credit sector.
Yeah, definitely. And staying with used cars and specifically used EVs, the next headline is from Autocar, and it is prices of used electric cars approach ICE equivalents. Now, this is an interesting one because it follows on from a story we reported on the podcast probably about a month ago, and it was research by Indicator, where they'd taken a basket of 5 new cars where there was an ICE option or an electric option, typically things like the Corsa, vehicles like the Corsa, and found that price parity was almost there. It was certainly closing in. But this one looks at values on used electric cars, and it's drawing on data from yourselves at Manheim Auctions.
Yeah, I think this was, on the back of the Indicator and the view from a new vehicle perspective. We wanted to sort of look at it from a used, what's been happening in that used vehicle space, and not dissimilar to what you were saying in the last story there. That when you're looking at fuel types, we know that petrol diesel is not yet back at pre-pandemic values. The prices have gone up. Yes, they've come down, but they're not coming down to a rate that they're coming down what you would expect in terms of normal depreciation over that 3-4 year period. Because you would have normally had a 10, 11, 12% depreciation per year, and we didn't get that. So I think the point that we were trying to make with Autocar was that EVs have come down, the new vehicle prices come down, the used vehicle prices are coming down, but at the same time, petrol and diesel have come down, but they're not coming down as heavily. So you're getting this price parity between ICE and EVs as a consequence of shortage of supply and demand for petrol and diesel, as well as the realignment of EVs.
Yeah, and it's interesting that some of the stats, because comparable petrol models sold for £12,980, which was 28% less than EVs and 39% less than diesels, whilst EVs were still much more expensive when compared with ICE cars across all age groups in this survey, averaging £16,829. That was over the course of the first quarter, compared with diesels £6,051 and petrols £6,108.
Yeah, and that's it. We talk a lot obviously about percentages and depreciation percentages, but actually when you start to put these things into monetary pound value, that's where you get the true insight into what's happening within the market. So I think there's a lot going on within the sector, and prices are coming down. It's a question of who's feeling the pain of some of these EV adjustments on prices, but we'll certainly keep an eye on it.
Yep. And next headline is from Car Dealer, and it is growing number of people looking to buy used car in next 3 months. So this is the latest research from Motors. It's their Consumer Insight Panel survey, which they do a couple of times a year, and it's based on a sample of just over 2,000 in-market decision makers, really about what their buying plans are. And I worked with the guys at Motors on this, so I've seen the research, and there's plenty more to come out in this. I mean, it's a really thorough piece of research, but this one specifically, this story is looking at in current intent to buy, and is saying that more people are planning to buy a used car over the next 3 months than they were this time last year. And it found that 18% of those in-market decision makers were looking to buy a car during the next 3 months versus 17% last year. So there's a 5% difference year on year. And what's more, the proportion expecting to buy before the end of 2024 is actually up from 43% to 44%. So a 3% year on year increase there. So some interesting trends here, and it really is showing the appetite in certain parts of the market, and certainly the used car market.
Yeah, no, I think it's optimistic. I think that's it'll be great to hear for a lot of the dealers out there that that is the direction and the optimism of that. I think those numbers looking at buying over the next 3 months, but more importantly, that 44% that are looking at buying by the end of the year is a great optimistic view of the marketplace. So I think that's it is, like I say, this is only the skin of what the insight is showing, isn't it? That I mean, they do talk a little bit about financing as well within it. So they're saying that 61% of owners paid for their current car with an outright purchase, but this will drop to 53% in the next buying cycle, the survey found, and that those paying monthly via some kind of finance or lease arrangement will grow from 28% to 33%, and the monthly subscription will grow as well. So going from 11% to 15%. So this is kind of supporting and highlighting this sort of change of behaviours about ownership of vehicles as well, isn't it?
Yeah, and it does actually reflect the sort of sweet spot of how much buyers are looking to budget on a monthly basis. So buyers are currently paying £262 per month for vehicles aged over 2 years. And when it comes to those sort of nearly new cars, the sub 2 year cars, they're budgeting at around £306. So some great insight there, and more to come.
Yeah, so let's say, as Kurt said there, head over to the Car Dealer report on this and watch out for more insight, because as Kurt said, there's a lot more detail in the study than what we've covered in that story there.
And after the break is our latest Men-Able moment, looking at mental well-being in the automotive retailing sector with our mental wealth guru, Stephen Whitton.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Men-Able moment, looking at mental wealth and well-being awareness and best practice in the automotive sector, with me, Stephen Whitton. Hi everyone, yes, it's Men-Able Moments time again. Hope you're well, and hope you're all ready and geared up and raring to go for another bank holiday weekend. And let's hope the weather stays on our side and brings you all the fruit and everything that you deserve for the weekend. What I want to ask you, though, this time is, what would a 28% reduction in stress levels do for your business? Would it increase productivity and efficiency? Would it reduce absence? Could it reduce attrition? Maybe improve morale? Would it certainly sell you more cars, book you more hours, get your utilization up, and ultimately increase your bottom line? Well, hold on tight, because at the end of this, I'm going to tell you how that 28% has come about. But obviously, as you know, we are all about mental wealth, and that is about making investments in people to ensure that their well-being is at the forefront of everything that you do. And in that regard, I want to really draw attention again to the challenge that I think our industry has. I'm not going to call it a problem because it could immediately switch some people off, but we do have a challenge. And the challenge in our industry is culture. And a mix of that is the performance element of our industry, the male domination of our industry, and just the general legacy of an industry that has typically employed in its own likeness. So when we start talking about all the things around well-being, and that does include diversity, inclusion, equality and equity, and making sure that we are, as creative as possible in our people development strategies, that causes us a bit of a challenge because many people are still clinging on to a culture that's got us where we are, but isn't necessarily going to get us where we need to go. So have a think about that, because that's all part of the mental wealth journey. Now, that 28% reduction in stress levels that I was talking about, we noticed that in some check-in processes that we were doing, some check-in sessions that we were doing with a couple of our Manheim members, and they opened up the opportunity for their team members to just make an appointment to have a chat with someone and just talk about what's going on for them. And the 28% reduction came about as a result of the way we measured it pre and post call, just on the basis of these people having an opportunity, half an hour, 40 minutes, to just talk to somebody outside of their normal circle who they know could listen to them, understand them, get where they're coming from, relate to them, and just the whole purpose and the whole thing of doing that just reduced people's stress levels. You could see the energy raising and the problems dissolving as we spoke to them. Now, that's a very sort of blanket approach and a broad brush statement to make. But I genuinely do see from that one of the challenges we have in our industry around stress levels, anxiety, well-being in general, could just be addressed by getting people talking, getting them talking to each other, getting a cohesive strategy going around the management team, getting them all working closely together. Now, we've had a few organisations that have reached out to us recently because they've got a good wellbeing strategy in place, but it's just not landing. Something's not clicking. And when we dig a bit deeper into it, they've got all the things that you would expect. They've got mental health first aiders. They've got posters on the walls. They've got commitments to charities. They've got training going on, but something's just not landing. And 9 times out of 10, the key issue there is culture. Our culture of being so driven by performance and results and objectives that we forget that at the heart of that is people. Now, when I say put people before profit, I can imagine some of you are going, what? I need to rewind that. And did he really say that? Yes, I did. Because it's people that make your business work, and people feel good about themselves, or when they feel good about themselves, they perform well. So if you want help with any of that, you know where to find us, menable.org, or you can find me at stephen.whitton@menable.org. So do some numbers, have a think. 28% reduction in stress levels. Just imagine what that does if you reduce absence by a couple of days a month. If you reduce attrition, if you just sell one more car or book 5 more hours, what does that do to ultimately affect your bottom line in your business. So there, hopefully, you can get a feel for what happens when you put people before profit. Anyway, have a great weekend. Enjoy whatever sunshine we get. And I look forward to catching up with you again soon. Take care.
There you go. That's just 28%.
Yeah, explained.
Yes.
Thank you for that, Stephen. Yeah, it all makes perfect sense now.
Yeah, and I think I have the pleasure of speaking to Stephen on a regular basis, and it is about that people. You can very get caught up on the profit, but if you've got attrition of staff, or there is a culture of illness and things like that within the business, then it inevitably is impacting your bottom line. And if you're continually having to advertise and recruit and train and things like this, that it's cost. It may not be the most obvious direct cost to a business, but it's a cost to the business. So, I think that's where Stephen is coming from. But very poignant messages there from Stephen as always.
Yeah, definitely. And as Stephen says, if you want to get hold of him, you can find him on LinkedIn, and he's got his own website, which is menable.org. Or you can email him at stephen.whitton@menable.org, and it's Stephen with a PH.
So carrying on with the headlines now, and we've covered this every so often from Fiat Group World, but it is by Car Industry Analysis, and this is by Philippe with an F, Elipe, who does some great stories, doesn't he, and great analysis, Curtis. We do like it when one of these comes out.
Philippe, I think it's Manos. He's fast turning into my favourite industry analyst, because if you don't follow him on LinkedIn, it's definitely worth checking him out. So as Phil says, it's Philippe, Felipe, and it's Manos, Munoz. Do follow him on LinkedIn, because he puts out these incredible industry stats on a regular basis, doesn't he? And this one is all around the top selling battery electric vehicle makers over the course of last year.
Yeah, so as I say there, they're saying that last year the drivers around the world bought around 9.6 million pure EV-like vehicles, saying that the figure, which excludes plug-in hybrids, the FEVs, and extended range vehicles, which is the EREV, who knew?
That's a new one on me.
EREV. Yeah, it gets better, as well as the fuel cell electric vehicles, which is FCEVs. Indicates that the demand increased by 30% compared to 2022. But it goes into a lot more detail, because he covers obviously who is the biggest global sales in since 2019. So he's looking at 2019. It went from 1.4 million to, as I said earlier, 9.5 million in 2023. So significant growth there since the 2019. But you can see there, 2020 to 21, it doubled from 2 million to 4.4 million. Not quite doubled into 2022 to 7.3 million, and then obviously a slow growth into 2023 to the 9.6 million. But it does go into detail in terms of those the top 10 BEV makers in 2023, and highlights the volume growth of those manufacturers as well.
Yeah, and we'll take a look at that top 10, and he does actually identify where the growth is coming from. And spoiler alert, Philip does say that the growth was driven by China and its increasing incentives to its new NEV industry, new energy vehicle industry, and increased demand from Europe, USA, Korea, and some emerging markets like Thailand, India, and even some Latin American countries. But overall, China still accounted for more than half of the global demand. So, that really is huge now. So the top 10, these are the top 10 BEV makers from last year, starting with number 10, Mercedes-Benz, number 9, Stellantis, number 8, BMW, number 7, Hyundai Kia, number 6, SGMW. And I can hear you asking, Phil, who are they?
Have you found out?
I have found out. Yeah, it's it's a joint venture between SAIC, SAIC, which is Shanghai Automotive Motors, General Motors, and Guangxi Motors, and this is very much a joint venture for the Chinese market. So they are at number 6. Number 5, GAC. Number 4, Geely. Number 3, Volkswagen. Number 2, BYD. And number 1 with 1,808,000 units is Tesla.
Yeah, and you can see there. I mean, what is interesting if you look at the growth numbers. I mean, Tesla grew 39% year on year between 22 and 23. But you look at BYD below them at the 1.58 million, they grew 81% year on year. So you can see how quick BYD is accelerating their volume and really going after that number one spot of Tesla there. So some fascinating stats there from this report.
Yeah, and Tesla and BYD, they sort of jostle for that top position pretty much on a monthly basis now, don't they?
They do, yeah. I think that's the thing now. I mean, even the noise coming out from both manufacturers, they are referring to each other in the majority of their financial statements now. So, they're very much looking at that market share. And I think we recently wanted that. I think BYD have got plans to be the number one. So they're obviously going after it, and they're going after it very quickly. I think the question is, if they can grow 81% in a year, what will next year start to look like? The full year for 2024. So yeah, I think it's it's growing into it very, very rapidly.
Yeah, and I didn't tell you about my scoop from the SMMT because I was with BYD, and some of their cars on the back have still got "Build Your Dreams," and some of them haven't. So I asked about this, and "Build Your Dreams" on the back of cars is going to disappear because they've done some customer research in the UK and discovered or found that customers don't actually like it.
No.
Unsurprisingly, I hope it didn't cost them a lot of money to do a deep dive investigation into that. But
just rang us, shouldn't they?
Yeah, exactly. Anyone could have told them that. But what I found interesting was it just shows how quickly they can react. So if they want to change something on their cars, there doesn't seem to be a huge amount of red tape. It can be done quickly, and even talking about some of the software in the car, the guy from BYD who was showing me around was saying, "Oh yeah, no, we want to tweak that," and some of the apps within the cars, so that there is a fair bit of autonomy there, certainly in the UK, to get it right for UK and European audiences. So
yeah, I have heard that. Yeah, I've heard statements from some of the Chinese manufacturers that have said that they may not get it right immediately, but they're improving. And if there is anything that needs changing, then they're prepared to listen. They're prepared to change it. So there's not an air of arrogance that they've come in and they've got it right. They're prepared to evolve and change things fairly quickly. And I think, as you say there, with BYD, and from our interview with BYD that time previously, was it Simon Bisp?
It was, yes. Yeah.
He basically said that everything is in-house apart from glass and rubber.
Yeah.
So if they do need to change something, there is no tier chain to get involved with. They just decide it can be done and they'll do it, which kind of shows the efficiencies of these new and I said new, they're not that new, are they? It's 30 years old, BYD, but these Chinese manufacturers that are coming into the UK and European markets from China.
Yeah, definitely. So we'll finish this week's podcast with a roundup of two stories that are really sort of rumbling on, and we've been talking about them certainly over recent episodes. So the first one is covered by AM, and the headline there is G3 vehicle auctions to invest 7-figure sum following Cazoo wholesale acquisition. So this is following on from the news over the course of the week that Cazoo had called in administrators from Teneo Financial Advisory at the beginning of the week, despite the company's actions to try and restructure in 2023. So this is the further update saying that G3 Vehicle Auctions is planning this 7-figure investment over the next 12 months to create a new 30,000 vehicle auction facility in Bedford following its acquisition of Cazoo wholesale for an undisclosed sum. So that pretty much brings us up to date with what's happening to that part of the Cazoo business. But I suspect there'll be more reports over the coming weeks because that's not all of the business.
Yeah, and I think there's a couple of takeaways from this. One being Karen Hurlston, who's a massive follower of the podcast and everything social, gets to call herself a divisional now because G3 has 2 locations. Well done with that, Karen. So hopefully we'll speak to you soon. But I think that one of the things with this is that the people at Cazoo have been through a torrid time over the years, should we say, Curtis?
Yeah.
And I think this acquisition, it saved a lot of jobs because I believe that the wholesale team from Cazoo have transitioning or are transitioning to G3. So there is a bit of job security involved with this, which is great news because we know over the years, Cazoo and what's been happening with the world of Cazoo has cost a lot of people their jobs. So I think it's great news that there is a part of Cazoo, whilst it's going through the administration side of things, that has been saved. And that's job security and everything else in that. So well done to everybody involved with that one.
Yeah, and final story this week comes from Auto Retail Agenda, and again, it's really a follow up on a story we've been following closely, and the headline rather is FCA DCA deadline push back into 2025 likely. And as we said at the top of the show, this came from one of the speakers at the VRA members meeting that you helped organise last week, wasn't it, Phil?
Yeah, it was the KCs that had been arranged by Jonathan from Geldards, that Jonathan Butler there, who'd arranged for the KCs to come out of London to present to the audience. And as I said at the start of the show, very much dealers and lenders were in the audience. But as it says there in Auto Retail, we had the pleasure of Jonathan Kirk, KC, Daniel Bailey, and Jonathan Goulding, who presented, and they were looking at the DCA from a legality perspective. This isn't about consumer rights, things like that. This is pure legalities around this that's gone on. But they did say, and they support some of the rumours that have been coming out at the minute, that there is going to be a potential extension, that the FCA will be asking for a deferment, because I think the initial announcement was meant to be on the 26th of September of this year, but they believe that they're not going to be ready for that, that they will ask for a deferment, and that deferment will go towards the back end of the year, and if probably go into next year before we get a clear clarity of decisions from the FCA as to what they're going to do around the discretionary arrangements. So yeah, it's going to be quite an interesting one, this one.
Yeah, definitely. Now, Phil, if only someone had done a podcast special on DCAs, eh?
I know.
We
Ahead
did.
of that. Oh, yeah, we did.
We
Yeah.
did, yes. Earlier this month, it'll be in your podcast feed. So if you want the full lowdown on DCAs from that sort of legal perspective, we did speak to Lewis Adamson, who's a barrister at Geldar's, and he gave us a fascinating update on the background to the FCA's investigation and where they are now, and really for dealers, what they should be looking at.
Yeah, definitely. So as Curtis said there, midweek interview we did week before last, I think, was it? So that'll be in your podcast feed there. But it was Lewis was down at the event with us, so we managed to meet in person. It was a great chat with Lewis there around what's happening in that DCA perspective from a legality view. The day was fascinating. I mean, the questions from the floor, Curtis, was I actually had to slow it down because we're in danger of running over by hours. Because there was so many questions, and I think people left with a lot of answers, but a lot more questions that weren't answered yet. Is the risk with this one? So keep your eye on that, and say head over to Geldar's website as well, because they are continually updating on the position where they can. But a great day, great event.
So we've covered a lot of headlines today, Phil.
We have, it's been a busy one.
Yeah, it has been a very busy one, but that really is all for now. So many thanks for joining us on the Motor Trade Radio podcast. Do enjoy your bank holiday weekend. Until next week, when we catch up with Cap HPI to talk about May's used car values, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.